Hello, everybody. Welcome to the Appleton REIA podcast. My name is Dan Alborn, alongside for the ride once again, Jackie Conkle.
Can't wait for this one, Dano.
Hola! Woo! Yes, today we're going to get a little bit, dare I say, a little controversial, maybe? I don't know.
Maybe a little.
Maybe just a fringe. We're not going to take it over the edge, but maybe put a clean pair of underwear on, buckle in for the ride.
Your big boy pants
Yeah,
up.
we're going to talk about getting woke today, Jackie.
But not what you're thinking.
No.
We're not going to get all political on ya.
No, we're not going to go that far.
Not that far.
But, that's all the rage today. People
Right?
getting woke in so many different ways. And again, we're not going to
Stop.
go down that rabbit trail. But we're going to talk financially today about how you can get financially woke. I got to slow down. The coffee's kicked in.
So
I'm on
excited.
full gear right now because I'm
Boom.
excited about talking about what we're going to talk about today and how you can become financially literate or woke, per se. And, of course, we'll preface any of this just to say we are individual people with our own opinions. And if you
Yes.
want, of course, financial expertise, you can talk to your accountant, financial advisor, yada, yada, yada. That's the disclaimer. Don't hold us liable. But this is our personal opinion. But we have a little bit of experience in this space, don't we,
Just
Jackie?
a little bit. Yeah.
And I think where this even stems from and how we even came upon this topic today, slow down, Dan.
Coffee.
Today, Junior. It's just the uncertainty today, right?
Yeah.
With the financial markets, our whole geopolitical
Political.
environment that we're in the U.S. and the world. I mean, the number of
Yes.
governments that have just went belly up in 2021 between
Already.
Russia, Germany, you
Yeah.
could say America in some instances. It's absolutely crazy, and there's just a lot of uncertainty out there. And where are you putting your money?
It's so weird, too, because our expectations are not the realities.
Right.
Like, we all thought, oh, my gosh, the politics have been so crazy, the stock market's going to crash while they wait to see what happens. But no, it
Right.
rallied.
Right,
And it
for sure.
continues to just be mental, right? Bitcoin right now, mental, everything. It
Yeah.
doesn't matter what you're investing in. Real estate, crypto,
Yeah.
regular Wall Street, everything's just off the charts. And nobody expected that.
Yeah, and I think you've seen even with the news headlines. I mean, taking the stock market for example. I mean, it's very strong right now. It's probably one of the strongest. The numbers seem very strong, but there's been holes punched into it. If you've watched
Yes.
stories in regards to GameStop. If you don't know who GameStop is, this is a brick and mortar store that used to sell hard copy discs of video games and trinkets and stuff. The reality is today's consumer video games, they buy it online. You don't need
Right.
to have a physical, it's like the old stores, Best Buy is one of the few last ones around there,
Right.
but having all the electronic stores.
Like Blockbuster Video.
Correct.
Right? We don't use that anymore.
100%. That's the same
Netflix.
idea, right?
Yeah.
So those have went by the wayside. So why all of a sudden, the beginning of January, did this stock go through the roof? Well, people are trying to show you that there's this false
It's
premise. It's fake. It's manipulated, right?
It's
you can
manipulated.
clearly see the manipulation with the stock market. And how many people out there listening have 401ks? There's a lot of people. If you're any bit past 40, 50, 60 years of age, you have a large portion because that's what you've been educated
Yep.
to do.
Trained.
Oh, here, take my money. I'm going to go take it for you, and I'm going to put it in the best possible buckets that we seem fit. Does anyone who have a 401k really manage it?
Never.
They don't, right?
No.
You have portfolio managers.
They give you like a group of funds, right? They
Yes.
give you a group, and you say based on your risk tolerance,
Yes.
you're in the short term.
Correct.
You're in the long term, you're in
Right.
the high risk, the low
Right.
risk, or you're in the fixed asset
Right.
bond market, right? Yeah.
So what happens when these companies that are, of course, invested in heavily or lightly decide to go belly up? What happens to your money?
Zero.
Yeah.
Lose it all.
You lose it all.
Stocks and those types of financial instruments can go to zero, and it's because of that and the inherent risk. Yes, some are riskier than others. Some
For
are
sure.
you got your Coca-Cola, and then you've got your whatever.
Right.
There's different. Harley Davidson has always been kind of an old dog, strong, regular stock, and then
Right.
you've got your Silicon Valley stuff that
Sure.
could be a shot in the arm or a nothing
Absolutely.
burger. So
Absolutely.
we all remember the Enron went down to zero,
Yeah, even sometimes the old stalwarts that you think that'll be there forever. I mean,
Yeah.
all it takes is some type of crazy thing that happens that, a
of
$500 stock turns to nothing,
Well, yeah, or like some person in control who steals money or is
Right.
laundering or whatever, and everything just goes down. So here's the thing, Dan. If you went to the bank today and said, I'd like to take out a loan so I can invest in Wall Street, what would they
Right.
tell you?
Well, they'd be like, "You're crazy."
Yeah.
There's no leverage there. There's no
collateral.
No collateral. That's what I'm looking for.
No
Yeah,
solid
yeah.
collateral.
100%.
What if you went to the bank today and said, "I'd like to take out a loan to buy a rental property"? What would they say?
Well, they'd want to see your financials, but they would be open to that discussion because there's something collateralized in the actual real estate, in the land in itself that has value.
Right. And it can't
True
go to
value.
zero.
Right, correct, yes.
Because if your house burned down, say you bought a rental property and it burned down, there's insurance. Is there insurance on your stock portfolio?
Nope.
Can you even buy insurance for your stock? You can't. So that tells you where's one of the strongest places you can put your money. It's real estate. I mean, the earth is not growing, right? So all the land that's here is all the land there's ever going to be.
Right.
You know, my father-in-law says they ain't making any more of that, you know. And property can't go to zero. Even if you forgot to buy the insurance and your property, your home burned to the ground, the land is still worth something.
Absolutely, yes.
It's impossible to go to zero.
Correct.
And I should be careful using the word impossible, but I'm trying to think of how it could be worth absolutely nothing. Every parcel of land is worth something to someone.
Right,
So,
agreed.
yeah.
And with anything, I mean, obviously value is dictated upon, the perceived value for it, right?
Yeah, the use.
The thing about with land, I mean, people need land, right? Whether it's to farm, whether it's to live, whether it's to actually have some type of dwelling or business, there has to be a plot somewhere that you put that, even if it's just a place to hunt. That's
Right.
just green space.
Yeah.
That's got great value. Specifically here in Wisconsin, people pay good money for good hunting land, right?
Absolutely.
People
Or to
will
put your tent.
Right, exactly. Or just whatever, your piece
Yes.
of life, whatever you want to have your Zen moment right on the river. What have you. There's value to you, and therefore it has a price to it. When we look at stocks, yes, those have value too, but it's more perceived value. And to Jackie's point, there's not much there. And then there's other things too. You can look at things like, you talked a little bit about the cryptocurrency. I mean, you have guys like Elon Musk that say, hey, I'm going to buy $1.5 billion of Bitcoin and shoots that up over $40,000.
Absolutely crazy.
I mean,
right
think
now.
about this. If you would have invested
nuts.
$100 back almost 10 years ago in Bitcoin, you'd be
done.
multimillionaire
Yep.
today. But people in Bitcoin also know it's the next technology. It's blockchain. We're not going down that path today. That's not what this is about. But I'm just telling you, it has value. But there's other upcoming cryptocurrencies. There's Ethereum, and then there's the old Dogecoin.
Oh, there's
and
so many.
again, it's like, what's your entry into that, right?
Right.
How do you get involved? How do you protect yourself? It's new, it's uncharted. But even with crypto, it's all based on hope.
Yeah, because
It's not backed by
it could still crash.
right. And then there's
It
obviously
could.
there's the precious metal markets. If you have something like gold or silver
Yes.
or titanium, there's value in those elements. But even that, in many cases, is overinflated because there's paper that they trade this with, and they don't have enough
back.
actual physical assets
Yeah.
to fulfill many of these orders. And you've seen some of the spikes with silver and gold, and so that market is also somewhat uncertain. I say you're probably better having some than not, but again, that's my own personal opinion.
Right.
I'm involved in a lot of those. Do I have crypto? Yes. Do I have physical metals? Yes. But I also am involved in real estate, and this is what getting financially woke is all about. Because, Jack, you know as well as I do, anyone who's worth anything financially has a large portion, or at least has been involved in real estate to some element in their
Correct.
life.
Right, and it also has tax benefits.
Oh,
And
my
of
word.
course, we get every 4 years, we get a new administration, or sometimes every 8 years we get a new administration, and they change
Yeah.
tax laws here and there,
Yeah.
and things get different. But real estate always has some type of a tax benefit, one way or the other, that you don't get with other holdings,
Yeah.
other financial holdings. And of course, there always will be, because like you just said, some of the bigger people,
Yeah.
right, the multimillionaires and billionaires in our country, they have real estate holdings, and we know that their lobbyists control
Yeah.
kind of what happens out there, and they need those tax benefits. So you're gonna have those,
Right.
And you can go right back to the old adage that cash flow is king. Right?
Absolutely. Well, sometimes you always have to see trends, right? What is big money doing? So if you see people
Yeah.
like, I'm not politically whatever you think of these individuals, I'll just throw it out there. But you have people like Bill Gates and Jeff Bezos and stuff like that. You know what they're doing right now?
Buying land.
They're buying land. They're
They
buying
sure
real
are.
estate. Why is that?
What?
And again, I'm not going to go political on you here. This is where we're pushing the fringes of you do your own research, right? But the reality is they're buying something tangible in land. Why? Because they're trying to leverage themselves. If the markets go crazy, for some reason, they have a tangible thing that they own that has, to Jackie's point, value. So if Microsoft went to pot, he's got acres and acres and acres of land that he can do something with, develop, farm, what have you. Whatever they decide to do, that's on them. But it has value, right?
And who knows what's under the ground?
Correct.
I mean, when you buy a parcel, you own all the way to infinity below and infinity above. So you own the airspace and the radio waves that go through it. You own the, whatever precious metals or anything else that might be underground. You strike oil depending on where you are. You can strike gold depending on where you are in the country. So you own everything that's in or above that land as well.
I was talking to an investor, and they might even listen to this, so I'm not going to mention names, location, whatever, but they have some land right now that has a very precious stone that's in this metal, or that's in the ground. And it's kind of a cool experience how they got into it and how they're holding it, and it's one of those things that it's going to come to fruition at some point in time, and when it does, it's a gold mine because it's very rare to have, and there's very few deposits like this in the world. And they own ownership in it. So,
how cool.
Again, it's just a piece of land.
Yeah.
You wouldn't think anything of it, but because they did the research and they figured it out, they bought in. It's pretty exciting. So we say all of that to say, listen, when you look at all these opportunities of financial vehicles, stocks, crypto, precious metals, really the linchpin in all this and where you see is to become financially woke, get educated in real estate.
Right, figure it out.
There's ways you can make immense amount of monies, and I would say the point of entry into real estate can be little to nothing.
It is.
Which is phenomenal.
And you can join venture with others just because people are more open to it. And you can also partner with a bank, right? And now I say that very carefully because I like to run my life by life and air principles, but just remember, you don't want to over leverage yourself. You don't want to go and get a zero down or interest only loan in the height of the market, and then when the market crashes, you're stuck holding the bag, like a lot of investors were in 2008.
Right.
But if you can be wise about it, or maybe you trade some properties, right?
Right, yeah.
You're buying low and selling high to start with, whether you're wholesaling or renovating and reselling, and then take the cash that you make with that and use it to go buy free and clear rental properties, or to partner with somebody else, and each of you throw some in and share the cash flow. Debt free, or, if you're okay with that, you decide, what risk you want and how much debt you want to put on something. The way some of the investors out there do it makes me very nervous, and they're very over leveraged. And in a market like this, you can look like a hero, but when things churn,
and they always do. I mean, the market is cyclical,
you don't know when.
Yeah.
You don't know when.
So it is a financial decision at the end of the day. Again, you have to kind of leverage what your risk tolerance is, and knowing that if it does turn, you figure back in 2008 when all these properties were going for multi-millions of dollars, and then 2 years later they're worth, a fraction of what they once were. You can't get caught up in the hysteria of that. So know your numbers. Be wise. Be smart. But what's exciting about real estate is in many cases you can get in for little to no money down. If you want cryptocurrency, you got to put your cash in. Specifically if you're just getting involved in the space. That's what makes real estate very attractive. And if you have a good opportunity, even if you don't have the cash, like Jackie was talking about, you partner with someone, and they'll know it's a good opportunity, and you can both financially benefit from it.
Absolutely.
So there's so many opportunities with real estate, and the other thing I love about real estate and how you can get financially woke is that you can get creative.
Yes.
There's so many different ways to buy. There's not just one trick pony to buy real estate.
We're buying a property in less than 2 weeks, and we're just taking over the loan that they already have, which they've had since 2007, so there's already equity there, not to mention that we're buying it also at a discount, so there's just a big win there, and we'll actually end up just renovating and selling that property most likely, but we didn't have to go and put our own money up for all of that, or go and get a loan or any of that kind of stuff. It has debt on it, it's just not in our name.
Sure.
But there's so many great opportunities too. I mean, if you have the education in real estate, you can partner with somebody who doesn't, and you have the time. Yeah. You could partner with somebody who has the money, but not the education or time, because they're out there being a doctor or whatever they're doing, and they have cash. They're also trying to figure out how they can get involved in real estate rather than Wall Street. but they don't have the time or the
Sure.
education. You can use your time and education and their money and partner and share the cash flow.
Right.
Why not?
Yeah, absolutely. And again, I'm not saying you take all your money that you have stuck in stock markets today, as a lot of people do,
we're
and
not
pull it
saying
out
that.
and do. I mean, you want to be diversified. If anything, they tell you that in the stock market, right?
Yeah.
We're going to put you in these different hedge funds or these different buckets that
Right.
you're going to be in, so that way if one goes bad, the other one goes good. It works itself out. But if the whole system collapses, that's a whole other story.
Yeah.
All we're saying here today is, are you in real estate? And if not, why not? Are you not educated? Would it make sense to maybe get some literature or meet with someone who knows real estate and get involved, whether you're actually involved in the day-to-day or what Jackie just said, you partner with someone. You find someone who's knowledgeable, that has experience, and say, listen, I'm willing to work with you. Here's some capital investment. I want to work with you in this project. And you can structure that in so many different ways that we're not even going to get into today, because that's not the point of this. All I'm saying here today is, are you ready to really truly see your money grow? Because real estate's one of the best ways to do that year over year, long term. And if you do it well, you can do extremely, extremely well, seeing returns that you won't see in any other platform out there today. And I can just speak to that personally.
I think some of the best time spent in real estate education right now, outside of knowing your market and your values and your rents, would be in creative deal structuring.
Yeah, agreed.
You know, trying to find ways that you can be involved in real estate without as much risk, you know, and just going to the bank and taking out a loan for everything you can squeeze out of the property. Because that's scary, and it's really not very financially wise,
Right.
you know, not trying to slam those who do it, but be careful. But again, you know, coming alongside of somebody who has the cash, now it's a debt-free investment. You know, you can use your ability to be creative and to know your market and find good deals, you know, in the time that you have to manage those properties, or just get out there and search for them and partner alongside someone else. Now you can get into a project that, you know, is debt free because you're using someone else's cash, but they're using your money and education.
And I'll say this too, and I have a lot of great friends that are bankers, so I'm not trashing them at all. But when they write mortgages and notes, they benefit the bank. It very rarely benefits you, who's who's being lent to.
The borrower.
The borrower. There's more things that are against you written in that document. So when you have a private note or a structure, it wins for everybody.
Yeah.
It works for you. It works for the investor. So you can structure those situations that are legal and binding, but everyone's protected. But it also benefits everyone. So that's the other element of getting creative like that. It puts the power back in your hands.
Absolutely.
And you're working as a team together, where a lot of times some of those financial institutions, specifically some of the larger ones, they're really looking out for their bottom line. Yes, they're willing to lend to you if you're lendable, and some people aren't even to that point. So that's where being creative and finding other people who are willing to partner on opportunities can be advantageous for you. So that's,
you see some of these bigger projects with syndications. I mean, it's all it is everybody throwing their hat in the ring and coming together. You know, there is no payments of interest and lenders and that kind of stuff. It's just everybody coming together, pooling their money, buying this amazing asset and sharing in the cash flow that comes off of it. I mean,
that's exciting stuff, man.
Those are the things that we're saying. Become financially woke. Understand what, you know, when you're looking at an entire book of investments, where's the best place to go and what's the most creative way to get in to protect yourself and get the biggest amount of cash flow and equity principal, you know, without the same amount of risk. You know, where can you go with less risk and bigger payoff and build that net worth?
Yeah, and like I said, if this podcast has done anything but just really challenge your thinking, because it's so easy. The easy way is to put your money in the stock market, because that's what we've been conditioned and trained and hope and pray. And year over year, you can look over things. Yeah, it's grown, but the reality is, guys, there's always ebb and flow with that. And I think it's just smart to look at, if you have, you know, thousands and tens of thousands and hundreds of thousands of dollars in the stock market, are you diversified enough in other things that if things do go awry, that you at least are protected somewhat. So, again, consult with those people who you find important in your life to do that with. But we can just speak from our own experiences of dealing with real estate. It's benefited us well. You know, if you're local and want to talk with us about opportunities and partnering and things like that, you know, definitely you can take us offline. We can go there too. But hopefully today, like I said, this really is opened your eyes to the opportunities that are out there for your money, your finances, to see it grow and protect yourself in smart investing and get yourself, like we said, financially woke.
Long-term net worth.
Yep.
That's the game
Right.
today. That's the game.
And again, I'll leave you with this. Everyone, where the money is today, majority of these people have real estate holdings and a good chunk of that in their portfolio that have allowed them to grow substantially with their wealth. So just keep that in mind. McDonald's, case in point.
Oh, yeah.
They are one of the biggest holders of real estate in
own the land.
world. That is why they are successful, not because they're selling, $2 hamburgers. It's because they own real estate in prime locations. So
And they rent out. They own the land and
Yes.
they rent
Yeah.
it to the franchisee, who then puts
Yeah.
up the building and opens
their
the
money
McDonald's.
is real estate, not about the burgers, guys.
It's very true. Look
Read
it up.
about that if you want to get financially
Look
literate.
it
So
up.
I'll
right.
say, guys, we'll leave you at that. Hopefully it's been helpful for today. Again, if you want to know more information like this, of course, subscribe to our podcast. I don't think we talk about that enough.
Right.
We're on a lot of different platforms, YouTube, wherever you listen to this, just hit subscribe, like. That way when the next episode comes out, Jackie and I will talk for 20 to 30 minutes and hopefully drop some nuggets for you guys that you can use in your own business. That's the whole point of doing this here today. Otherwise, AppletonREIA.com is the website to find out what's going on. Get deals locally or nationally if you're part of the National REIA, because we are a member of that, and also a Life in Your member. So if you want to learn out how you can put your life first and build your business around it, I highly recommend checking out that book by Steve Cook and Sean McCloskey, as this is a Life in Your REIA too. So I'm just continuing to talk here. I'm going to wrap this thing up. All right, guys. The coffee is about to wear off here now, so I'm going to let you guys go. Have yourself a good one. You've been listening to the Appleton REIA podcast. I'm Dan. She's Jackie. See ya.
See ya.